Give me 1 second. How do I, okay, think. See if you can share, take your screen, Tommy.
Yeah, I don't see the controls pop up.
It's on the bottom.
Oh, share. Cool beans. Yeah, all right. That looks pretty good. Hey guys, like Aria said, my name's Tom Raviel. I appreciate you guys' time, you guys being here. Couple of things off the, right from the jump. I just want to let everybody know I'm not a professional trader. I don't have a Series 6 or 7 license. I'm not on here tonight going to make any recommendations about what anyone does with their own money. I'm just here as a fellow trader. Been with IML for about a year now. I'm very happy to be a part of the university. And tonight we're talking about solely trading. We're not going to talk about opportunities or group building. For any of that information, Aurea is queen among builders, and you have her at your beck and call if you have questions. But for tonight, we're going to talk about trading. And Aurea, thank you for that introduction. I appreciate you very much. And Aurea made references to kind of the way my brain was wired. I tell people all the time, I'm living proof God's got a good sense of humor. Because when I was 2 years old, I assembled my first mechanical device. At 5, I built my first complex machine, which just isn't normal. And that's just something that came from the factory. But along with that very acute skill, I was also blessed with several learning disabilities, dyslexia, ADH, whatever. I mean, just all kinds of stuff. And when I went to school back in the 60s, I'll be 63 this year. So I went to school in the 60s, and when you didn't get something, they just smacked you with the ruler because they thought you were more. So not to turn this into an educational thing, but what I had to do is I had to learn how to learn things a different way, because I don't learn things the way the vast majority of the people do. I'm what's called a tactile learner. I have to have it in my hands. I have to use it. And I have to actually exercise it to have it make sense for me and for me to remember it. So why is that important? Well, we're in an academy. This is International Markets Live. It's one of the coolest mechanisms by which to learn the foreign exchange. We have a vast amount of very competent educators. Daisy Duncan is among my favorites. And even though I had all that at my beck and call, I still had to get into the market and take my lumps real time in a demo account before it stuck. And what I did is I found a strategy and a niche using our tools that really simplified things for me. And I'm just going to explain or show you guys what I've been doing with this particular tool to a fairly successful degree. So and again, disclaimer, past results do not guarantee profit.
I love harmonic scanner.
And yes, I think
Can I ask you guys to mute yourselves, please? If I knew how to do that, I would. So yeah, please mute yourselves. I'm not a big Zoom guy. I usually listen to the Zooms. I don't run them, so that's where we are tonight. So yeah, let's get right into it. We'll go for the jump. So what you should be seeing on my screen, and if you're not, please shout it out, and Debbie or someone will help you answer some questions or direct questions to me. What you should be seeing is our harmonic scanner. So let me zoom in real quick. And what's really cool about this tool is the harmonic scanner is running every minute of the day that the market is open. And what is it doing? It's scanning. What does harmonic suggest to you? Well, it's cyclical, just like a harmony. It's a fractal environment. The market goes up and the market goes down. That's all it does. Sometimes it goes sideways a little bit, but it's going to go up and down. So Stephen Hooley wrote this really cool program that uses a trading view chart, and it throws signals for us automatically. And I said, well, that's really cool. So why don't I just do that? Nice. Well, the issue is, even though you have a really cool signal, you can still screw it up. Because believe me, I did. And this is why I'm on tonight, to show you how not to screw it up like I did, right? So this is a scan. It's a Gartley pattern. There's shark patterns and butterflies and all different kinds of shapes, which is fairly irrelevant to the conversation, other than the harmonic scanner just running the math, running the algorithm in the background, makes this identification and throws the scan up. So let's go see how you get to a scan. You pick a broker. I like the 1 hour, 4 hour, and daily charts because that's a higher view of the market. It's a longer term peak. I like to understand what the market's doing as a whole. And then if I want, I can come and scalp little bits out of it. So I want to see what the trend is. I want to see where we're going. So that's why I like the longer scans. So you come over here, and this is NZDJPY, and that's what I have up now. That's a brand new scan. That's a Gartley, right? And if you click that, that's what you get. Now you'll notice there are other scans that the harmonic scanner has identified. And what does that mean? That just means these pairs are in motion. How do we get paid as traders? We get paid when something's moving, right? So if there's a pair and the value isn't changing, I have no interest in that pair because I can't go in for a buy or a sell if it's doing guts and ghoul. There has to be some motion, right? So this is telling me NJ, NZD, JPY, I just call it NJ, is moving on a Gartley. And then look at this, Euro NZD, EN. That's moving too. How cool is that? So if NJ is moving and EN is moving, there's a common pair there. There's NZD is common. So that means JPY and Euro have to be moving as well. So I can take a hint. Anytime you see a commonality in these pairs, the arbitrage trade here would be EJ. Euro, Japanese yen also will be moving. So that gives you an opportunity to go into your, I use TradingView. So I'll go into my TradingView chart and I'll pull up the arbitrage trade as well. If for some reason I don't like what the scan is showing me, or if I want to just see what else is going on. It gives me another opportunity to trade. So let's get to the chase and let's see what they're showing me here. So this pair, you'll notice over here on the right, you got to stop. That's my stop loss. What does a stop loss do? It stops the pain, man. Let me out of this thing. Ain't going right. I want to stop it. So if I'm losing money on the way up, I must be in a sell. So whenever you see the take profits lower than the entry price, and of course the stop loss is higher than the entry price, it's a sell. So here's my entry price, and you'll see that the scanner realized that this price is it was trending upwards to this entry price, and it did not make the entry. So this, if you would have just typed in these numbers in your account, with your broker, you wouldn't be in this trade because it never made your entry. So I realized there's still money to be made here, but how would I proceed with caution in a responsible way just from this? Well, this is really cool, and the scanner is I won't say right. I said it's very accurate, but like 8 out of 10 times. This might be one of the, 2. So we have an ability, because this is a trading view chart. I can come over here to indicators. See it? Like, here's the 15-minute chart. These are my candles. These are chart properties and indicators. I can hit my indicators, and I can go see Johnny Bollinger. My Bollinger Bands. I love this guy. I can throw additional tools on here to give me additional information to drill down into the harmonic scanner. I don't like taking one person's opinion about anything. Like, I go out to dinner, I want to find out what everybody's having at the table before I make up my mind. Same thing with Forex. Same thing with the market. I want to hear everyone's opinion. So a Bollinger Band is nothing more than a series of moving averages. The top of the band, or the edge of the market, are the highs. The bottom of the band, or the lower edge of the market, are the lows. And the red line is the median. Now, if you look back in history, what do you see? I see the price closing outside of the edge of the market on the high side. What does it want to do? It always wants to return to mean, RTM, return to mean. So once I see this close, I know sooner or later it's going to want to come back towards the midline. Now, when it comes back towards the midline, it does one of two things. It bounces around a little bit, or it goes through. And what do you think it's going to go next? It's going to go to the low average. Here it didn't close outside the edge, but it wicked outside, and then it goes back, and then it goes down, and then it goes back. Get it? It's got a harmonic type of activity. It goes up, then it goes down. So tell me, why is that important? Well, my harmonic scanner is saying, hey, yo, Tommy, listen, I really think that NJ is going to be a sell. That's like my paid informant, my rat, my snitch, my market snitch. Tommy, dude, it's going to be a sell. I'm pretty sure. Keep your eyes peeled. Let me see what Johnny Bollinger's got to say. Now, what did Bollinger tell me? Bollinger told me that my high was less than my entry point. My high was less than my entry point. It closed out here. This candle closed outside of the high. What does Johnny Bollinger say? It's going to return to mean. So this is still really, really good information that we'll get from the scanner. Even though the scan missed on its numbers, its value, it's a fortune. We don't throw the baby out with the bathwater, right? I know this puppy's coming back. So, and let me point out something that's very interesting. There are people that trade just with naked charts. Flat tops, flat bottoms. Flat tops, flat bottoms. Let's go back to the beginning of this Gartley. It started, my X point started with a flat top. The entry price on both of these candles are the same. And then it goes down. The top is flat. Every time you see a flat top, the price will go down. I don't know how much. And I don't know for how long. Nobody knows. The only ones who know are the market makers, and they ain't telling nobody nothing, right? We got to figure it out ourselves. And let's just see if that's true. Here's my next flat bottom. What happened? It reversed. Flat top, flat bottom, flat top. Here's a flat bottom. Did it reverse? Yep. Just don't know how much and for how long. But it went. So now how can I use that information to help me make a decision about NJ on this current scan? Well, dude, so I'm over here. I missed my entry, but that's a freaking flat top. What's about to happen? It's going to go down. it's going to go down. So another very interesting tool that I'd like to hear from is my RSI, Relative Strength Index. That's right here at the bottom. This puppy shows up all the time. You don't have to mess with anything. So an RSI 14, the 14 in the parentheses means that this is a running average over the last 14 candles. That's all that means. If you're on the hour chart, last 14 hours. On the minute chart, last 14 minutes. Super simple. So if I come over here to the outside border and click on my mouse and stretch it down, that'll put me at 100%. So here's 0 to 100, 0 to 100. Now when I get to the 30 point, and this is a standard, this is something that we don't mess with, when my price is at 30 or below, that means the market for this pair is oversold. At 70 and above, it's overbought. So this pair very rarely in the last several, this whole bunch of candles, however many hours this is, never really broke into the oversold or overbought position. It kissed oversold a couple of times, right? But what's it telling me? It's telling me, if you look at the angle that it's traveling, it's really not making any kind of major moves. This is a really significant move down. This is a significant move up. See how these blue candles are here? And the RSI is climbing. Look at this drop. And the RSI fell down. And then the RSI came back up because of these candles. So what this is telling me is my scanner is saying to sell. My Bollinger Band's telling me to sell, flat top. But now my RSI is gaining strength, and now I got some blue candles. So just because the entry price wasn't made initially right here at my D extension, doesn't mean it's not going to come back at another pass and make my entry. That could happen. That's a very happy day, right? Then, if you were to type this in to your broker, then you'd be in the trade, okay? So, I have some other snitches I like to use. I have my relative strength, my SAR, S-A-R, parabolic SAR, and that stands for stop and reverse. Now I'm going to go into format this a little bit because I had a master trader direct me to change these times to 0.03, 0.03, and I'm going to make this one yellow, and I'm going to make it really big, and I'm going to do this. But being that I have a white screen, you can't see, I'm going to right click, go to properties, and I'm going to go to background, and I'm going to make this a little darker for you guys. Okay. I'll say that. Excuse me. Okay. So, what's cool about my stop and reverse? If you look back in time, way back here, when the SAR is below the candle, you're in a buy. When the SAR is above the candle, you're in a sell. Cool beans. So here, right here, when I have my SARs on, Johnny Bollinger's telling me, dude, it's going to be a sell. At this point in time, I was right here on the RSI. The RSI was going down. Please mute yourself. Thank you. And, but what did I have? I had my SAR was at the bottom telling me it was a buy. I was getting mixed signals. So for me personally, Johnny Bollinger is telling me it's going to be a sell. My harmonic scan is telling me to sell, but my SAR is still saying buy. So that gives me pause. I'm going to wait a little bit. I'm going to let the market do what it does, because it could be a very haphazard, confusing place at times. So me personally, for me to get in, I want my SARs on my side. And I actually use 2 SARs because I'm just that kind of cautious kind of person. So I'm going to throw in another SAR. And on this guy, I'm going to make this guy 06. .2, and this guy I'm going to make red. I'm going to make him big. I'll make him bigger. Now, the reason why I use 2 is the red SAR for me is like my early warning system. You'll notice the red SAR flipped over first. Here. Look back here. I have the yellow SAR on the bottom and I have a red SAR on the top. That's a split decision. Not everybody's in my favor. If I was going for a sell, I want all my guys on my side. Anybody ever here? Anyone here ever play tug of war, like on the beach? Right? You guys seen tug of war? Huh. Well, see, tug of war is kind of like trading. And if you draw a line in the sand and you tie a knot in the rope, that's the market. On one side is a buy, on the other side is a sell. And what I do is I like to line up all my indicators on my side of the rope. Because when I hit my entry in my account, in my brokerage account, that's like the gun goes off. Pull the rope, dude. So I want all my indicators pulling on the rope in my direction. So if I'm playing tug of war and I'm going into a sell, I want all my indicators on the sell side. If half of them are on the buy side, half of them on the sell side, that's not very compelling. I'm not very interested in taking that trade. Do I force the trade? No, I go look somewhere else. Let's go see what other parties are going on over here. Say I didn't like that for some reason. I'm superstitious. Here is, what do we have here? EG, Euro Great British Pound. And I have this set up. Boom, boom, boom. Now, what is this one telling me? Is this a buy or a sell? Shout it out if you know it. Where's my stop loss? Is this thing calling out a buy or is it calling out a sell?
Buy.
Right on the ball, Mr. Brooks.
Buy.
You are 100%. So now, this puppy is pretty much textbook. Look what happens. I love this chart. I love it. My main snitch, the harmonic scanner. You, Tommy Love. Huh. EG. Gonna be a buy. My D extension. It plopped right down in my entry. Boom. Plopped right down on my entry. But now, if we were back in time, and look, anybody could sound like they're a freaking genius talking about the candles that are already here, and I don't want to portray myself like that. I'm just saying, if we roll back the tape to where this happened, where my D extension made the entry, is my entry price, and I got in, yeah, this would have been a happy story. Because me, I only take 5 pips. I'll say it again. 5 pips. Take 5, stay alive. I want like 100 in a row, 150 in a row. My mean average is 75 wins in a row. And I'm not patting myself on the back. I won't take 5 pips. I won't take 5. Most retail traders get their clock clean, get their heads handed to them because they're afraid they're missing the move. I'll say it again. Most retail traders, this is a fact, 90% of all retail traders lose 90% of their account in their first 90 days. They put 500 in, they put 100 in, they put 1,000 in, they get beat up. Then they run away for 3 months, 4 months, they go back on YouTube. They watch some more Fakakta stuff on YouTube. Then they work up the nerve to put another 500 in their account. And what do you think happens in 90 days? Same story. We're very blessed to have a very masterful set of educators keeping us from that horror. But the market makers and the brokers, they play on a novice's sentiment and their attachment, their novice relationship with money. It's a novice relationship with money. What do I mean? When you're in the market, money is merely a tool. It's no longer Benjamin Franklin. It's no longer Hamilton. It's just a number. It's a lot size. It's a lot size in a chart. And the moment you discipline yourself to remove or limit your attachment to money, change your relationship with money to view it as a tool. First, you don't ever trade money you can't afford to lose. Never trade money you can't afford to lose. I want you to picture yourself, I got a convertible, right? So I'm picture myself driving down I-95, I got $1,000 in my hand, and I just wing it and let it fly to the wind. Because when you put money in your brokerage account, that's exactly what you're doing. It's gone. The number one responsibility of a trader, a proficient trader, is to protect your investment. Is to protect your investment. What's your investment? It's what you put in your account. I want to grow that account 5%, 10%, whatever a session. And when you consider a bank gives you 0.000 whatever percent interest on your money, you make 5% or 10% in a session, now you're cooking, right? Now, it don't seem like you're cooking when you're trading in micro lots, when you went and you pulled out 5 pips and it's 11 cents. You're not running home to your wife saying, hey, babe, quit work. You ain't doing that. But what I want you to realize is when you learn the tools and this very, very simple tool with this very simple methodology, if you continually pull out 5 pips, like 99.9% of the time, like 99 times out of 100, you're grabbing 5 pips. What's happening to your account? Have you ever heard of anyone going broke taking a profit? Is it possible to go broke when you take a profit? No. So I just take a little profit. But now, a little profit over a long period of time, you start trading micro lots, you're going to go to minis, you're going to go to standards. What happens when you're trading in lots of 10? Each pip's worth $10, right? Things get different. So there's going to come a time when you're trading in lots of 1,000, lots of 500. There are people who trade. I know traders in IML, their standard lot size, normal trade is 50. 50. That's $500 a pip. So if you're taking 5 pips, $2,500 on a trade, you do 2 or 3 trades in a session, are you upset with me? But you're never going to get there unless you learn how to run your micro lots and you lose that attachment with money and you realize it's just a number and it's all about the chart. So I digress for a little bit there. And again, disclaimer, disclaimer, disclaimer. Past performance is not guarantee future success, all that stuff. But look at what this chart did. It called out a buy. It went into my entry. Boom. I'm in the trade. I'm happy. Nothing, not a whole lot is going on. I see, if you're one of those people that watches the trade like this when you're in, you're losing your mind over here. It's supposed to be a buy. Oh, I got money. Oh, I'm losing money. Oh, I'm losing more money. Oh my God. Right about here, you're ready to get out. You're ready to get out of what is going to be a profitable trade. Learn the chart. Learn the methodology. Put all your snitches on your side of the rope. Pull the rope in the right direction, and let the market do what it does. Because if you're winning 6 out of 10 with an appropriate risk management profile, you have to be profitable. It's math. Math will work for you, I promise. Your math is not going to be any different from anybody else's. Math is math. So what happened here? So let's just say I'm looking at this trade and it's telling me a buy, and I have my SARs lit up and I have my Bollinger Bands lit up. Johnny Bollinger's telling me, oh, look, this closed outside of my lower edge. It's going to go into a buy. But what are my SARs saying? Not yet, dude. Don't play this game until my SARs flip. Now, what happens if you had patience? See, this is patience right here. These are patient candles. If you have some patience, now how do you read the chart? If I'm on this candle, what are you looking at? I'm looking at a split SAR. Right? I got a yellow on the top, red on the bottom, red flips first. I also got Johnny Bollinger telling me it's going to be a buy. I got my harmonic scanner telling me it's going to be a buy. When I'm down here like this, and I'm in this part of the Bollinger Band, and even though it's split like this, I probably get in because I've seen this 1,000 freaking times. But if you don't, you wait till the next freaking candle, and you wait. Now look, I got both SARs in a buy. Johnny Bollinger's telling me, look, you're cool. It's going to be going up. My RSI is flat. Why do we think the RSI is flat right now? Volume's down. This isn't a very active time in the market, so volume is really low. Okay? So if I would have got in here, right here, let's get my measuring stick and practice what we preach. Boom, boom, boom. If I would have got in here, and would I have gotten my 5 pips? Who loves me now? I wait for my indicators. Boom, boom, boom. You don't trade unless your indicators showed up to the party. Oh, it looks like it's about to. Don't play that game, because it looks like you're about to go broke. Wait for the indicators. The indicators are telling you what has happened. It's not a guarantee what's about to happen, but I want to know that all these points have been hit. Right here. When you're patient, you get paid. When you're patient, you get paid. Cool. See, right over here, this is also a flat bottom. That's another indicator of what? It's another indicator that I'm going into a buy. Anybody have any questions? Anyone?
Tommy.
Hey, Deb, yeah, shoot.
Okay, Indiana keeps saying that she's a little, that they're confused about the SARs.
Okay.
And then also, sorry, I was trying to answer everything, but I kind of messed up as I was doing something.
No
so
problem.
I didn't get back to everybody. And Then there was another question, and I can't find it. Oh, somebody had asked, how do you come up with your stop loss? And what is your stop loss?
Cool.
And I
Okay.
think that's pretty much it at this point.
Okay. Let's just do stop loss real quick. The Harmonic scanner gives you a stop loss. So when you're taking trades off the scanner, I don't recommend what your stop loss is, because that's all about your risk appetite. Some people are willing to have a higher stop loss. I don't. I set my stop loss very narrow because I am committed to the trade. I trade aggressively when all my indicators show up, so I jump in. I don't think about it. I have my SARS, I've got this, I got all my indicators, boom, I'm in. But now if things go south, boom, I'm out. So if I put a stop loss at 10, if my stop loss is 10, and I'm looking to continually grab 5 pips, how many winning trades do I need to have to break even? 2. Is it easier to have 2 winning trades to come to neutral? Or you're going to put a 50 pip stop loss and then you got to... I used to do that because someone told me in the very beginning, what goes up must come down. That makes sense. I ride the elevator. I know how that works. The problem is, by the time it comes back down, you'll be broke. Don't do that. So exit a trade as aggressively as you get in when it's going south. If the trade pulls away from you, get out. Because one of the first things that we need to talk about or do is fundamental analysis before you even get on the chart. Let me see, new share. And I'm going to get back to you on the SARS, don't worry. Does everybody see this Forex Factory? Okay, fundamental analysis. This means what in the world's going on? The Forex Factory, this is free. It's a site that gives you all different kinds of things that's going on in the market. If you come over here to this little filter guy and click on it, you'll notice I have my red and orange folders clicked. And these are the events: any kind of growth, inflation, employment, central bank, bonds, housing, consumer surveys, business surveys. Do you think those things might impact a trade? Well, yeah. You ever notice like you're in the middle of a trade somewhere and you got this candle from hell going away from you? Because some kind of news announcement happened, right? So you can apply your filters. And now this tells me today is April 24th. These are all the announcements during the day. So if I'm in Jappy, if I'm in, yen pair, I know here I got some tentative announcements. If I'm in CAD, 11:15 a.m., there's a CAD announcement. CAD, I got announcements up the wazoo. So am I going to be trading CAD? No. Unless I am trading the news. Trading the news is a very specific methodology, and Cam Moore is like the master of trading the news. There's a lot of information on trading news. If your trading plan does not include trading the news, make sure you're out of your trades when the news comes, because invariably, you will hit your stop loss. So that was that. Let me go back to my other guy here. Now let's go back and talk about SARS. SARS stands for stop and reverse. I'm going to talk real slow. I'm from New York. It's hard to talk slow, but I'm going to do it now. Stop and reverse. The market is a fractal environment. What does that mean? It means it goes up and down. So wouldn't it be a good thing to know when the pair is stopping one direction and going in another? Well, yeah. That's what the star does. The star does. It tells you when it's going to stop doing what it's doing and do something different. Now let's look back in time. Let's look at the beginning of this chart. I'm going to go real big. This is as big as I can get it so you guys can see. When the SAR is at the bottom of the price, under the candles, that means it's a buy. Well, what does Johnny Bollinger say? Well, look, it's in the top, it's at the top half of the market. It's in a buy. So what happened here? I've got, see how this is orange? That's the red over the yellow, and it looks a little orangey. So all of these guys are right smack dab on top of each other.
Yeah.
And it's still in a buy. I'm sorry, this is a buy, and over here it flips over to the top and it goes into a sell. So I have both of them flip over at the same time and drive this right into a sell. What did you see happened at that same time? I have a flat top. A flat top means the price is going to reverse. It's going to go down. Flat tops means the price is going down. Flat bottom means the price is going up. I just don't know how much and how long. Nobody knows. So this is telling me I'm going to go down into a sell. My SARs flip to the top of the price. When the SAR is on top, I'm in a sell. Now look, I'm in a sell, 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 sell. I stopped and reversed. SAR, stop and reverse. And now I'm in a buy. And you'll notice when these things click over, there's a lot of air. There's a lot of room in between the price and the SAR. A lot of room in there. And notice what happens when the SAR comes and touches the price. It flips. Touches the price. It flips. Okay? So I use this as another one of my snitches to tell me what's going on. Now,
Tell me.
hindsight. Yep.
I had somebody asking, can you show how you pull up the indicator box to find your SAR?
Yes, of course. Okay. So remember, this is a trading view chart. I'm not here looking to sell people on TradingView, but for me, TradingView is a fabulous tool. I use it all the time. I take the data off of my harmonic scanner and I put it into TradingView to look at it. So here, these indicators are right there. And then you can just type in SAR. And parabolic SAR is just that, to stop and reverse. Now, I use two of them. I set my yellow one, my slow acting one. Watch me punch it. Is set at 0303.2. And then my fast acting, I have 06, 06, and 2, and I make that guy red. And typically what I'll do is I'll make one a smaller size. Because there's times when they overlay. And you can kind of see when one's laying over the other if you make them a different size. Okay, Debbie, did that answer that?
Yes, and then I've got Indiana asked, do you mean a lot of room because of the wick is so long?
Oh, okay, cool. No. Nope, well, I can see. This just happens to be a wicked candle. I'm going to find some other one. Here's a candle that doesn't have a wick, and this is the room I'm talking about, like that. And here's another candle. That's the room I'm talking about. See, here's a flip. Here's a candle over here. The SAR flip. And this is the room. So in order for this is just a mess now, isn't it? So this is telling me sell, 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 sell. And now we're going into a buy. All right, let's talk about somebody else. Want to do another one? Or somebody got some more questions? We're on for 45 minutes. Has anyone been actually doing this that has any kind of results that you want to talk about or any kind of questions on trades you got into? Cool. All right.
Tommy.
You.
Yeah, I just want to let you know that I have been trying all this stuff, but on demo, which is a good thing. I think it's great information, but practicing on demo is the way to go. I totally agree.
Yes, and I'm glad you brought that up. Yeah, perfect. I really should talk about demo a little bit. See, when you get into any kind of position with the foreign exchange, whether you're learning on your own or IML or other instruction anywhere, as a beginner, you're looking to get out of demo as quick as you can. A novice trader views demo as like purgatory. We're going to get out of here. I'm going to ask you to shift your mindset. I'm going to ask you to think of demo as a highly regarded area of your life. It's a place where you go to exercise. Demo is the gymnasium of the foreign exchange. That's where you go to build up your Forex muscles. I don't know if you've ever seen Randy Webb. That guy's a beast. He works out all the time. You don't get to look like Randy Webb unless you spend some time in the gym. And you don't get to have Randy Webb's trading account unless you've been in demo. You need to be in demo. You want to learn these lessons on monopoly money. Why is that important? Because demo also gives you the ability to make that disconnect from actual money and start treating this like the math exercise it really is. This is just an exercise in math. And believe me, math is not my strong suit. I am dyslexic. Full disclaimer, I only trade the Japanese yen. All pairs, except Swiss franc, Japanese yen. My personal preference. Why? I'm freaking dyslexic. See this right here? Look. This right here, that drives me crazy. You guys can read that number? I'd rather blow my brains out. Japanese yen's only got 3 decimal places. So being that that's my disconnect, that's what I have to work with in my brain, I just found a way to make it easier on my brain. So there's such a huge plethora of instructors, of methodologies, of indicators. You will find something that suits your risk appetite, your learning curve, and everything else that'll make you a very happy, proficient trader if you just look for them. I'm just giving you what I found and sharing what I found from a very beginner, novice point of view. And there's nothing wrong with being a novice. You can't be an expert until you've been through novice. I have a demo account today. I never stop trading in demo. I'm in demo every week. If I'm going to do something different, I do it in demo. If I'm going to exercise a new indicator, I'm going to do it in demo. Doesn't hurt. As a new trader, you have to get over the feeling, the thought in your mind is that you're missing something. The market is always in motion. It's always in motion, and we get paid for motion. We get paid for motion, delta. We get paid for the difference. If something's moving, we get paid. We just got to figure out which way it's moving. And you'll never miss a trade. You'll never miss it because it's always moving. You might not get in when you want to get in, and there was a big move that you didn't grab any pips on. Doesn't mean you missed the move. It means you're lined up for the next one. I'd much rather be outside of a trade wishing I was in than inside of a trade getting killed wishing I was out. Patience. Patience. Believe me. Yeah, I even stopped calling. See this over here? Here, check this out. The world calls this consolidation. You know what Tommy calls it? That's patience. If you're patient, you'll get paid. 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 It's patience and paid. Just be patient and you will get paid. I promise you, if you are impatient and you have an inappropriate relationship with money, you will be bailing out of winning trades left and right because you're afraid of losing. Embrace the loss. You cannot win unless you lose. You cannot win in this game unless you lose. Learn how to lose. Because once you learn how to lose, it's easier to win. Tell me that makes no sense. Believe me, it didn't make sense to me either. When you open up your demo account, you need to open up your demo account, in my opinion, with the same exact number that you're going to open up your live account with. If you're going to start trading with $37.42, that's your demo account. If you're going to be trading with $1,587, that's your demo account. Why? Because that reflects your reality. When you start lining up Benjamin Franklin and you take Benjamin Franklin off the bench and throw him into the game, you want to make sure you're treating the man right. So how are you going to learn to treat him if he's never played that game before? Think about that. Don't be setting up a demo account with $3 million in there, trading in lots of 50 like you're making all this money, and you're not learning the skill. Making money has nothing to do with the skill. Making money has nothing to do with the skill. And I'll prove it to you. If I enter a trade and I'm in micro lots and my trade goes great and I grab 100 pips, let's say I'm hanging out with Lindor and we're doing some position trading and I grabbed 100 pips and I went in with a micro lot. How much money did I actually make? I only made a couple dollars. And then if I was trading in lots of 100, I bought a house. But understand the disconnect. It's the skill. It's the same exact skill. The skill you learn in micro lots, will pay your mortgage in standard lots. The skill you learn in micro lots will pay your mortgage in standard lots. But I promise you, if you don't learn these lessons in demo, not going to happen. You're just going to be beat up, black and blue, this don't work. My broker's out to get me. Everybody else is winning and I'm losing. Why do you think I only take 5 pips? I like to win. I'm happy winning 5. Take 5, stay alive. Boom. I win 3 trades in a row. 3 in a row. When I win 3 trades in a row, I get up and walk away. If I'm on 15-minute candles, I'll get up at least 15 minutes, half hour. I'll go do something else. Go take the dog out in the backyard, whatever. Why? Because I want to reset my brain. I don't ever want to get cocky with the foreign exchange because it will cripple you. I want to make sure each indicator hits. I want to follow my strategy to the letter. Same repeatable strategy, same trading plan over and over and over and over. Just keep winning. And you'll be very happy. You can't go broke taking a profit. Anybody else? I appreciate that.
Yeah.
Thank you. Yes, anybody else?
Yes, I do, Tommy. In fact, I have a couple questions. As you were talking about the SARS, and now when the scanner was actually calling a buy, you said that, I think you said that when the candles are below, no, when the SARS are below the candles, it's a buy.
Yep.
And when they're above the candles, it's a sell.
Yes, sir. Here, look at the screen right here, Robert. Right?
Okay, I'm looking.
Okay, so here, let me just make it bigger. Here, the scanner hit the D extension, which is what? That's the entry price.
Right.
So if I just entered this scan right from, just by reading the numbers, just taking the numbers and entering it, I'd be in this trade right now. And there's nothing wrong with that. The scanner is beautiful, 8 out of 10, right? But I'm just looking for some additional information. I don't want to ride the red bus. Who knows what the red bus is? The red bus is as soon as you click the trade, it goes red. And now I'm riding that red bus to God knows when. I want to be blue. That's just the way I just like being blue, right? It's just me. This is just the way I do it. Don't have to do it this way. So this particular trade hit, and then it's telling you what? On the scanner, it's telling you take profit 1. If you would listen to the scanner, did you take profit? No, you did not. The trade went in the direction that the scanner said, but at this point in time, it has not taken profit. Now, might it go past the midline of the Bollinger Band and go up? Yeah. Cool. That's you. That's someone else. Me? I got my profit right here. When this thing flipped, when I saw my 2 SARs, let me pull up my little rulery guide. Right? I wait for my 2 little guys to flip. Here's my price. I'm looking for how many pips? 5. What does that say? 7.5 pips. Did I get my 5? Yeah. Now, someone else is still waiting to take profit. And now they're looking at this and they're all pissed because they lost money. Because the price was up here and now they're going in the red. And what are they doing? Oh man, let me get out before, and they're getting it all twisted up over following the trade, in my opinion, too closely. So I want to get in and get out. I want to get in and get out before most people have taken their profit. Why? Because the less time you're in the market, the less time your account is at risk. What's the number 1 responsibility of a responsible trader? Protect your investment. So if you're in trades for a short amount of time and you keep on grabbing profit, are you protecting your investment? Yeah. I want you to think of approaching the market from a very high level of professionalism. And professionalism is a very interesting thing because no matter what field we're talking about, this statement is true. If you are a basketball player, a hockey player, whatever, tennis player, do these people practice more than they play? Well, yeah. In order to be a professional, you have to practice more than you play. Same thing with a professional trader or a responsible trader. You're watching the market a whole lot more than you're in the market. You should be in the market no more than 10% of the time. In my opinion, trading the way I trade with this strategy, 90% of the time in patience, 10% collecting money. Well, gee, Tommy, how are you ever going to make any money like that? Well, it's really simple. Look at all my choices. Count them. I got a bunch of choices here. There's more money to be made than I know what to do with. Because if this doesn't make you happy, you go start looking for some arbitrage trades. Here's one here, right here. Arbitrage. EN. EU. So what do you think UN is doing? There's a plethora of opportunity here. Don't focus on what you're missing. Don't focus on what you're missing and just get what you can get. You cannot go broke taking a profit.
Tommy,
Yes.
sorry, you do have a couple of questions. Somebody had asked before, how often do you refresh your screen? And do you look at all the trades that are there?
Okay,
And
good
the
question.
harmonic scanner, and then also if you could go over the Bollinger Bands again.
Of course. What I do is I use, full disclosure, I prefer, this is a trading, an actual trading view chart. So I will come here to the scanner and I will see who's in play. Here are my suspects. These are all my suspects for the day right now, for this session. Now I got these suspects, and then I want to go and I want to pull in my snitches who can tell me more information about each one of my suspects, right? So I will look at the first couple and go if there's a trading opportunity there. If I don't find a trading opportunity that I'm comfortable with in this time frame, I will look at some others, or I just won't trade. I will be patient and I will wait, because as you develop the skill, you'll be able to tell more or less, oh, this thing is going to be ready in about an hour or two. So I'll set a timer, or I'll set an alert on TradingView to give me a heads up when the price gets to a certain point, because then the trade should be ready for me to jump in. But that's a little more advanced in the conversation tonight. If someone's doing that, has questions about that, I can talk about that offline. So, Bollinger Bands. John Bollinger, phenomenal trader. He came up with this strategy where he looks at the top of the edge of the market. This is the highs, the median average of the highs. And this is the average of the lows on the bottom edge of the market. And then the red line is right smack dab in the middle. Now, the market goes up and down. We all know that. So you'll notice when the Bollinger Band gets very, very narrow, the price is not moving. This is patience. This is consolidation. When the Bollinger Band spreads out, because there's a big difference in the average of the highs and the average of the lows. When there's a big difference in the average of the highs and the average of the lows, that means there's going to be some motion. Who gets paid when there's motion? We do. We get paid for motion. Motion makes money. So in this scenario, all of these guys are telling me I got a buy. And then here, my SAR, see, I have both SARs on the buy side, both SARs on the buy side. And now my quick one flipped, my red guy flipped over. Now I have some conflicting information, and I have a relatively narrow Bollinger Band. I wouldn't trade this if it was the last. Forget it. That's just a mess. I have a narrow Bollinger. I'm in patience. I have a split SAR. But look, boom, when you're patient, now I got both SARs telling me it's a buy. And right here I have a flat bottom, which means the price should go up. And wow, look at this. Boom, 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 boom. Now here's something that's very interesting. You can have ascending candles and not an ascending RSI. The RSI is flat near the oversold position, overbought position, even as these candles are ascending. This is why I use my RSI as a very secondary indicator. I like my SARs and my Bollinger Bands a whole lot better. It's a more reflective indicator for me. So now what's happening? What happens when the price closes outside of the edge of the market, outside of my average high? RTM. RTM. Return to mean. Nature wants everything to return to normal. It's going to return to mean. It's going to get back. It's going to do everything it can do to get its butt back inside the band. But it doesn't do it immediately, right? So if I'm here on this buy, let's just say all my indicators, me, with my strategy, I would have waited to here. This is my in. I'm in a good spot in my Bollinger Band. And I have both SARs on the bottom side in a buy. Would I have gotten 5 pips? Heck yeah. You get 5 pips all day long. I would have gotten 5 pips, and then I would have looked at it again. And I would have seen that my SAR has a lot of air in between the price and the SAR. See this gap? This gap is telling me that I am comfortable getting in for another 5. And I probably wouldn't have done it the third time. Why? Because I'm not here about the money. I'm here about reading this chart. That money is there. The money in the market is there. It's got your name on it. When you figure out the chart, you get paid. When you figure out this chart, you'll get paid. So now, here's my little SARs come in. Now what happened? Look at that. Real close to the price. Didn't quite touch it, but it flipped. And it flipped majorly. Both of my SARs flipped into the buy. I'm sorry, into the sell. And what? I have a flat top. When I see both of these guys flip, both SARs flipped over after a candle's been closed outside my Bollinger Band, I know it's going to want to go back to the mean. Both of these guys flipped. Boom. I'm getting in and taking the 5 for the sell. I'm here for the sell. And then I'm not going to get greedy. I'm not going to go jump in that and jump in that and jump in that. I'm going to reconfigure my thinking. And I'm going to say, okay, what's happening? Well, I'm still returning to the median. I'm still coming off of this candle that closed outside the Bollinger Band. And now I'm heading down towards my midline. It's either going to bounce off the midline and come up. Like here. This is making a classic M. When you see this M, like this, comes down to the midline and bounces back up, you ever see this where the price comes up to the high end of the Bollinger Band, kisses the midline, and comes back? That's payday. Payday. It's going to drop like a rock. And there it is. And full disclosure, my preference is trading sells. I go in for sells a lot more often than buys because human beings panic. And when something starts dropping, it's like a panic sale, fire sale. Let me out, let me out, let me out. And I'm there, yeah, sure, get out. Because I'm winning on the sales. So we've been here for, wow, over an hour. If there isn't anything else, we're going to call it. But if you have any more questions, I'm here for you.
Yeah, Tommy. One more question. Can you explain the flat top and the flat bottom?
Yes, sir. Absolutely. So if you come over here, let me go back. Get me a good one. Sorry, making you guys dizzy. Okay. This, okay. If you see up here, this is the opening price of the candle, the high of the candle, the low of the candle, and the close. So if I click on this candle, see how the numbers change? Now the numbers are blue because this is a buy candle, and this candle closed at whatever that number is, 86549. Now, let's go to this candle. This candle opened at what? The same freaking number, 4950. For all, that's one pipette. So for all intents and purposes, that's the same. So when this one closes and this one opens at the same exact price, and it goes in a different direction and it leaves this flat top, that's what a flat top is. Now, if you're on, this is a 1 hour chart. So I don't want to confuse you. What I do, as this is forming, I call this a halftime report. At 30 minutes on a 1 hour candle is halftime. 30 minutes on a 1 hour candle is halftime. So there comes a time when this candle is being formed on the 1 hour chart. So if I'm here, wherever, at the 30-minute mark, and at the 30-minute mark, I'm in the upper half of the previous candle, the odds are it's going up. If I'm in the lower half of the previous candle, the odds are it's going down. That's the halftime report. So flat top, flat bottom. Flat top, flat bottom, it's going to reverse, just don't know how long. Flat top, going to reverse, just don't know how long. Boom. So let me see if I can come over here. Yeah, these are 15-minute candles. So whatever this the odds are, I don't know because we're going back in time. But you see how short, this is an engulfing candle, how short this candle is? The odds are at the halftime, at the 7.5 minute mark, this candle, the red candle, the sell candle, was most likely at the lower half of the body of this buy candle. And that's telling me the price is going to go down. I hope I didn't confuse you with that. That's a little more than it's a little more advanced than a beginner stuff, but that's the way I judge my flat tops and flat bottoms in terms of my entry. Anybody else? Well, as usual, I appreciate everyone being on here. I value your time. Everyone here knows how to get a hold of me. If you need me, call me. Get me in the group. Nothing further. I'm going to wish you all a great week. And we'll see you all next week. Thanks, guys. Debbie, appreciate you. Ori, thank you very much. And we'll catch you guys later.
Thank you so much, Tommy and Debbie.
Thanks, Tommy.
Greatly appreciate you. See you next Wednesday night, everybody.
All right, thanks.
All right, good night.
Night.
Thank you.
Have a
Good
blessed
night, everybody.
evening.
All right.